14. Control account and reconciliation. Control account and reconciliation. Before moving to control account, let's revise our receivable ledger. We have covered receivable ledger in a the opening balance brought down we record here, and closing balance we can call it balance carry forward we record here. You know, if we make credit sale, entry is a receivable debit, credit sale credit. So credit sale will be recorded here. And if we are receiving a cash from receivables, this means cash debit receivable credit. So we record cash here. And in case of any irrecoverable debt, we record here. In case of any sale return, the entry of sale is a receivable debit sale credit. So in case of sale return debit receivable credit. So we record
Yes,
sale
sir.
return here. Is that fine? Can we understand this?
Oh, yes, sir.
In similar manner, if we can revise a payable ledger. Payable is a liability. So its opening balance means balance brought forward is always on credit side and balance carried forward is on debit side. In case of any purchases, purchase debit payable credit. So we record purchase here. And if we are paying cash to the supplier, cash credit and payable debit, so we'll record cash here. And in case of purchase return, the purchase entry will be reversed. Purchase entry is purchase debit, payable credit. Now payable debit and purchase return credit. Is that fine?
Oh, yes,
So
sir.
normally the receivable balance is debit and payable balance is credit. But sometimes it happens receivable balance become credit. Then it will be recorded here. How it balance become credit? When our customer has paid double amount. Mean he cleared his previous balance, mean balance becomes 0. And if he paid doubled, this means we have received more. This means we're gonna pay him. This means this balance will become credit, mean liability. In similar manner, the payable ledger balance opening could also become a debit. When we have paid twice to the supplier. This means with one payment, his balance become nil. And with double payment, his balance become debit, mean we're gonna receive from the supplier. This balance could become debit. Our receivable balance could become credit. Can you understand this? Mean in what cases receivable could become credit balance, and in what cases payable balance could become debit.
Oh, yes, sir.
Whenever we record entry into receivable ledger, we need to record entry into receivable control account ledger as well. Whenever we record entry into receivable ledger, we need to record entry into receivable control account ledger as well. Receivable ledger is relating to individual customer. If we are having 10 customers, there will be 10 receivable ledgers. Separate. This is called receivable ledger relating to a particular customer. Receivable control account is a combined ledger of all the 10 receivables. Why we need to record entry into receivable as well as a control account mean combined total of all receivables for identifying any errors. Like what we do at every month end, we identify the closing balance of each receivable. We make their list and total them, and we compare this total with the control account balance. If both balances are same, mean there was no posting error. But if both balances were not same, this means there was error either in control account, mean combined account of all receivables, or either in any of the individual receivable accounts. So we will identify and rectify it. So what's the purpose of creating control account? To identify posting errors so that we record entry in both individual receivable and combined receivable like control account, so that at month end we can compare their balances, mean total of all receivables and control account balance. If it's these two are same, mean there was no posting error. If these two were not same, there was posting error. And comparing this control account balance with the balance of all individual receivable account, this is called reconciliation. In comparison of one balance with others. Can you understand this?
Oh, yes, sir.
How to prepare individual receivable account, that we have learned. In this chapter, we're gonna learn how to prepare receivable control account ledger or payable control account ledger. First, we're gonna discuss about receivable control account ledger, how it will look like. So when we make credit sale, we record entry receivable debit sale credit, and against credit purchases, we record purchases debit payable credit. Don't need to read this. We have already covered this. Now moving towards what is the receivable control account ledger balance. This is receivable control account. The balance brought forward mean opening balance normally debit in nature, but due to some reason it could become credit, so we will record at credit side. The credit sale we will record here, and sale return we will record here. Cash received from receivable, so cash debit receivable credit we will record here. Irrecoverable debt mean confirmed bad debts we record here. You know, sometimes we receive a check from the customer. When we received a check from the customer, we make entry bank debit, cash debit, receivable credit. But if we deposited the check into the bank, that check become dishonored. Why? The customer account is having no balance of that check. So first, when we received the check, we made entry cash debit receivable credit. This means that a check has been dishonored. This means the balance is still due to that customer. We will reverse the entry. How? Receivable debit and bank credit against dishonored check. So dishonored check will be recorded here. Mean we need to debit the receivable. So can you understand these ticks?
Oh, yes, sir.
Okay, if there is a balancing figure here, this is the debit balance of receivable. And if balancing figure come here, this will be the credit balance of next receivable. You know, interest
sir.
charged mean if due to late payments, we charge some interest to receivable. Mean if due to late payment, we impose some interest on receivable. This means receivable debit, interest, income credit. So we will record here. Is that fine?
Oh, yes, sir.
What is this bank refund of credit balances? Bank refund of credit balances, leave it, don't need to cover it. Now we left, what is this contra? Sometime to one party, we make sale. So we recorded entry receivable debit, suppose with the 10,000 and a sale credit with the 10,000. And to same party, we make some purchases of 12,000. So we will record purchase debit with the 12,000 and payable credit with 12,000. This means to same person, to same company, we need to pay 12,000, but we need to receive 10,000. But we will ask them, instead of we are paying you 12,000, you are paying us 10,000, we can adjust these balances. How much balance we can adjust? We will say, okay, this 10,000 that we're gonna receive from you will be adjusted against this payable. So remaining 2,000 we will pay you. If we are adjusting any receivable balance with payable balance, that will be called contra entry. How we will record this contra entry? This receivable we will eliminate how? By crediting receivable, and this payable we will eliminate by 10,000 how? By debiting payable. So receivable is credit, payable is debit. So credit receivable will come on credit side of receivable with contra entry. Contra entry mean adjusted with the payable of similar company or similar person. Can you understand this? Opening balance, credit sales,
Oh, yes, sir.
dishonor check, interest charges, sale return, cash received, irrecoverable debt, contra entry. If there is credit balance, it will come here. If balancing figure is there, so this will be debit balance of next. If balancing figure is here, this will be credit balance of next. Is that fine?
Oh, yes, sir.
Now moving towards payable ledger. Normally it is having credit balance. If we pay cash, cash credit, payable debit. For credit purchases, payable debit, purchase return credit. No. Payable debit, purchase return credit. This is the return entry. This is for credit purchases, purchases debit, payable credit. This is contra entry, like payable debit, receivable credit. So we will debit payable against receivable. What is this discount received? If by paying cash early to the payable, he provided us some discount. So payable debit with full amount, suppose 12,000. We paid him 10,000, 10,000 cash credit, and remaining 2,000 we will record as discount received income. So payable debit, discount received is credit. That's why it will come on debit side of payable ledger. This we don't need to cover. If the balancing figure is coming here, that is the normal practice. This is the credit balance of next. And if balancing figure is coming here, in rare cases, this means this is the next debit balance. Can you understand this?
Oh, yes, sir.
Let's move towards the question. These abbreviation we should know about. SDB stands for sale day book. PDB stands for purchase day book. SRDB sale return day book, purchase return day book, and cash book is a CB. What's the accounting entry for contra payable debit receivable credit? Mean we are eliminating receivable by crediting it, and we are eliminating payable by debiting it, because normally it has debit nature, it has credit nature. So how we can eliminate? Reversing them. So test your understanding one. We have a small question. What is required? Prepare the receivable ledger control account and payable ledger control account for Jones and Company for the month of November 20x5 to determine the closing balance and closing credit balance on the receivable ledger control account and payable ledger control account. Meaning simple word, we need to prepare receivable ledger control account and payable ledger control account, and we need to identify their balances. So we're gonna open receivable ledger control account first. Okay, ji. Jones Company prepares monthly receivable and payable ledger control account at 1st November 20x5. The following balances existed in the entities record. Receivable ledger control account debit balance is this, credit balance is this. This means balance brought down 54,000 here, and balance brought down 1,000 is here. Credit sales, receivable debit sales credit. So credit sales will come here.
In the debit.
251,000. Cash sales. Do we need to record cash sales? No.
No, sir.
Ignore this.
Credit sales will be in the credit.
Credit purchase, it will come in payable.
Yes,
Credit
sir, credit.
purchases will be come in payables. Cash credit sale return. How much? 11,000.
11,000.
So sale return we will record here.
Credit.
Yeah, 11,000. And then credit purchase return relating to payable. Amount received from credit customers 242. So cash received how much? 242,000. Dishonored checks 500. Amount paid to creditors. This is relating to payable ledgers. Amount cash discount received when we receive cash while paying a cash. This is relating to payable.
It will not come here.
Irrecoverable debt return of 4,000. Is recoverable debt 4,000. Increase in allowance for receivable. Do we need to record allowance for receivable in receivable ledger?
I don't think so.
No, we record entry irrecoverable debt debit allowances for receivable credit. So this will not come in this ledger. Irrelevant. Interest charged to customer 1,400. So interest charged here.
Yes, sir.
And contra settlement of 800. So contra here, because the receivable become credit and payable become debit. You know? And now we are having a receivable debit balance and credit balance. What does that mean? This is the next debit and credit. This means next debit will come under. Next debit will come under here nil, because on the credit side. But next credit will come under debit side. So this will be called balance carried forward. How much? 2,000. Mean credit will come on debit side, debit will come on credit side. Mean this is like if by totaling, this is the balance brought down 2,000, mean credit balance. that will be written under current and credit side. Is that fine? Now we
Oh,
can
yes, sir.
balance these figures and we can find here balance brought down. What's the balance carried down here? So 54,000 plus 251,000 plus 500 plus 1,400 plus 2,000. It will become 3,089,000. 3,089,000. What is the balancing figure? Five zero 100. Check this if it's the same. Check
Sir,
this if it's the same.
25,880. Yes, sir. 50,100.
Is that fine?
Oh, yes, sir. Mine is coming same.
Okay, now we're gonna open payable ledger control account. So balance brought down. Balance brought down. What are the balance brought down? On debit side it's 200, on credit side it's 43,000. 243,000. Okay, next what? So credit sales, cash sales, credit purchases 77,000. Purchases debit, payable, credit. So purchases against what amount? 77,000. Okay, what next? Cash purchases we need to ignore. Credit sale return, credit purchase return of 3,000. So purchase return of 3,000. What next? Amount received from credit customers, dishonor check, amount paid to supplier 74,000, payable debit, cash credit, so cash 74,000. Discount received 2,000, payable debit, discount credit, discount
Oh, yes,
income credit. So how much the amount? 2,000. Irrecoverable debt, no, no interest, no contra 800, yes, contra against receivable, we need to debit the payable with 800. And now what about the balances? Balance carried down, balance carried down. Where this 200 will go, either on debit side or credit side? This will go on credit side because it's next debit. Balance brought down 200. So we need to tally both and find this figure.
Oh,
So
yes,
what's the
sir.
total of both sides? 120 200. And this balancing figure, check if this is 40 200.
Oh, yes, sir. It's same.
Same. Done.
Oh, yes, sir.
Okay, let's move forward then. Test your understanding too. Test your understanding too. So just reason why there might be a difference between balance on receivable ledger control account and the total of the list of account receivable ledger account control account. There could be difference due to credit sales not recorded, sale return not recorded, contra entry not recorded, dishonor check not recorded, interest not recorded. Mean you can name all the figures under it. Leave it. We're gonna move towards reconciliation. How we can perform receivable control account reconciliation. When we compare receivable control account with the individual receivables ledger balances, there could be some differences. Those differences could be due to mistake in control account or mistake in individual ledger account. Could be in control account, could be in individual ledger account. How we can correct those misstatements, we're gonna discuss it now. How we can correct those misstatements, we're gonna discuss now. If the mistake in control account, what we will do, we'll open our control account, receivable control account means combined ledger of all the receivables. So we will write here balance brought down, mean debit balance. That is the normal case. If due to that mistake, there is a chance of increase in receivable. So we will record here adjustment, increase in receivable. But if there is a mistake due to which the receivable control account balance should be adjusted and there is a decrease in receivable, then we will make adjustment on the credit side in case of decrease in receivable. How increase or decrease will happen, we're gonna discuss later on. So then we will balance this figure. Here we will find the balance carried down and this will be the our actual balance. So in case there is a mistake in control account. So what we need to do, whatever is the difference, if that difference is relating to increase in receivable, we will adjust on the debit side. Obviously, receivable balance is debit. Increase means we need to make debit. If that difference is relating to decrease in receivable, mean we need to adjust the figures relating to decrease in receivable. This means receivable balance is debit. How we can decrease by crediting it. In similar manner, if we look about payable ledger control account, normally the payable ledger balance is credit. If there is any difference while matching payable control account with individual payable ledgers, we need to make adjustment regarding increase in payable. So if for increase, we need to record on credit side increase, because credit balance can be increased by crediting it. Increase in payable. In case of any adjustment relating to decrease in payable, we will record on the debit side and then we will tally, we will find a balance carried forward here. That will be the actual corrected balance. So this is relating to if by reconciling mean comparing control account balance with the individual receivable or payable account balances, there is a difference and difference has identified that there is a mistake in control account. If that mistake is relating to increase in receivable, we will debit the receivable control account. If that mistake is relating to decrease in receivable, we will credit the control account. And for payable, the reversal effect. If the mistake is in individual ledger, rather than control account, individual ledger of receivable, then what we need to do, we need to check what is the balance given in question. And any adjustment that is relating to increase, we will add, and relating to decrease, we will subtract. And then we will find the correct balance. And in case of payable, the add will be credited and the decrease will be debited. Let's move toward test your understanding 3. We can understand it in better way. Before moving toward test your understanding 3, I think we should solve this illustration 1. What is this illustration 1? What we need to do? Prepare the part of payable ledger control account reflecting the above information. And prepare a statement reconciling the original total of the individual balance with the corrected balance on control account. Let's see what is going on. Aston's payable ledger control account is an integral part of the double entry system. Individual ledger control balances are listed and totaled on a monthly basis and reconciled to the control account balance. Information for the month of March is as follows. Individual ledger account balance at 31st March have been listed out and totaled 19,786. This is the balance of individual account given in the question. The payable ledger control account at 31st March is 21,832. So first open payable control account. And normally the payable ledger is balance is credit. So we will record balance brought down how much? 21,832. And this is the individual ledger balance. Upon further examination, the following errors are discovered. The total of discount received for the month amounting to 1715 has not been entered in the control account, but has been entered in the individual ledger account. This means there is error in control account. Mean this discount received has not been recorded. So we can record where we record the discount received on debit side, because payable debit, discount received income credit with how much amount? 1715. Because there is error in control account, not in individual account. On listing out, an individual credit balance of 205 has been incorrectly treated as a debit. This is relating to individual. We will discuss it later on. Or we can open here individual account as well. Individual account. So individual account balance we got 19766. So balance given in question, that is 1978666.
Double six.
Okay, so this is the balance. On listing out, an individual credit balance of 205 has been incorrectly treated as debit. In individual account, there was a credit balance of 205, means should be recorded on credit side, but you have recorded it on debit side. This means now we need to correct it in individual account. How we can correct it in individual account? If 205 credit has been recorded on debit side, the first we need to credit with 205, that will nil the balance. And then we need to again credit with 205. This means we need to credit it with double, like 205 plus 205. And this is already credit balance. Credit will add with each other. So this is wrong balance. That we recorded wrongly. 1205 credit will eliminate the debit 205. But the original 205 should be on the credit side. So second will correct it. Okay, this 205 should be on the credit side. Can you understand this?
Oh, yes, sir.
Okay, next, a petty cash payment to a supplier amounting to 63 has been correctly treated in the control account, but no entry has been made in the supplier's individual ledger account. So we paid 63, a petty cash payment to a supplier. This means supplier debit, cash credit. So either the 63 will be added or deducted. The 63 should be added or deducted.
Oh, so 63 should be added.
If you add, this will increase payable. You have a make payment of 63 to a supplier.
Okay.
This
Okay.
means payable debit, cash credit. So this should be
Debit.
deducted,
Okay.
payable debit,
Minus.
because this balance is credit balance.
Yes, sir. Oh, yes, sir.
Okay, the purchase day book total for March has been understated by 2000. Purchase day book total, either it is relating to individual or control account. Total word mean control account.
Control account
Has been understated by 2000, mean 2000 understated. This mean we need to record this 2000 here, understated. Mean payable ledger is normally credit balance. If it is understated by 2000, this means we need to record 2000 more balance where its nature credit. Can you understand this? This is a little bit tricky. This is tricky.
Yes, sir.
Contra set of with receivable ledger amounting in 2004 have been correctly treated in individual ledger, but no entry has been made in control account where we record the contra in payable this side, because payable debit, receivable credit against what amount? 2004. Now we can tell you. What's the amount here? 19766 plus 410 minus 63. It will become 20113. And what the balance will be here? 23832. 23832. The balance will come 20113.
Yes.
This will be the balance carried down, and this figure should be come here, balance brought down 20113, and this figure should be similar. If they become similar, this means our question is correct.
Yes, sir.
Is that fine?
Oh, yes, sir.
I mean, this is the whole concept of control account covered here. I mean, how we can reconcile.
Okay.
Now moving forward. So these are the steps. You don't need to learn these steps. Test your understanding 3. What we need to do? correct the receivable ledger control account and reconcile this to the sum total of individual account in the account receivable. And again, we need to perform reconciliation, but for receivable rather than payable. This means we need to open receivable control account. And individual receivable account. Balance given in question. What it will be that? See. So Wendy's is a business selling umbrellas branded with corporate logos. The umbrellas are sold on credit rather than for cash. The accountant is carrying out a reconciliation of the receivable ledger control account balance, which is 172,000 to the total of balance on the individual account in the receivable ledger, which is 176,134. So 172 is the control account balance brought down. And balance given for this is 176, 176, 134.
176,134.
Okay, the following has been found. A contra item of 1,500 has not been entered in the receivable ledger control account, where we record the contra this side.
Credit side.
Of what amount? 1,500.
1,500.
So this is done. A check for 555 from a customer has been dishonored. The correct double entry has been posted to the individual account, but has not been updated. Where is not been updated? Where it not been updated? From a customer has been dishonored. The correct double entry has been posted, but the individual account have not been updated. Mean individual has not been updated. So we need to update the individual account with dishonor check, where we record the dishonor debit side or credit side.
Debit side.
Debit side, this means this balance is debit, so this should be added here. You know. Number 3,
yes,
a payment of 322 from a customer has incorrectly been entered in account receivable ledger as 233. I mean, there was a payment of 322, but we recorded 233. Mean with less amount. This means with the remaining amount, we have to record the payment. How much is the remaining amount? The difference between these two amounts is 89.
Oh, yes, sir, 89 rupees.
Where individual or control account?
Sir, it's individual.
Individual, because from a customer.
From a customer. Yes, sir.
So we need to record here what receivable, credit, cash, debit. This means receivable will become negative against
yes, sir.
What? Wrong payment. Number 4, cash received of 800 has been debited to the individual customer account in the accounts receivable ledger. This means it has not been cash received of 800. What's the entry of cash received? Receivable debit, cash credit, or receivable credit, cash debit. Cash debit, receivable credit, because cash is coming. So we received 800 cash. The entry should be cash debit, receivable credit. Have been debited to individual receivable account. I mean, instead of writing on credit side, we have written on debit side. So first 800 on credit side will nil the balance, and the remaining 800 will again correct the balance. This means we need to record cash received with 800 plus 800 with 1,600 negative figure. Can you understand this?
Well,
Okay, next number 5. Total credit sale of 4,500 to a large accountancy firm. Total mean relating to control account. Close and counter have been posted correctly to the ledger account but not recorded in the control account. What is that? Credit sale. What is the entry of sale? Receivable, debit, sale, credit. Reversal for credit sale means sale return, debit,
And
receivable,
receivable credit.
receivable credit.
Oh, yes,
Sale,
sir.
is that a sale return or sale? This is sale, not sale return. Total credit sale of
Oh,
4,500. So credit sale we need to record here. How much amount? 4,500. That's enough.
it's
So
not sale
balance
return.
these. Yeah, balance these. What's the balance here?
Sir, 16. Oh, yes, sir. Mine's coming the same. 175,000.
Is that fine?
Oh, yes, sir.
We next move towards question number 4. Tonga received a statement from a supplier Coke showing a balance of 14810. Tonga's payable ledger shows a balance due to Coke of 10,000. Every month your supplier send you your statement. Statement mean he is saying this amount I gonna receive from you. We are also having supplier balance in our account. So there are two parties. One is called Tonga and other is called Cook. So Tonga received a statement from supplier Cook showing a balance of 14810. Where the balance is 14810 in Tonga book or in Cook book?
Uh,
In Cook book because he sent the balance to Tonga. In his book showing, I gonna receive 14810 from Tonga. While Tonga's payable ledger shows a balance due to Cook of 10,000, Tonga book showing there is a balance of 10,000 that I need to pay to Cook. Investigation reveals the following. Cash paid to Cook of 4080 has not been recorded by Cook. Who didn't record the cash payment of 4080? He didn't record the cash 4080. This means he has to record 4080 mean deducting this. You know?
yes, sir.
And Tonga is recorded the fact that a 40 cash discount was not allowed by Cook, but forgot to record this in the payable ledger. Mean he recorded 40 discount received, but that discount has not been allowed by Cook. And he forgot to record in his book. If he forgot to record in his book, this means he has to record 40 on the debit side. So what discrepancy remains between Tonga and Cook's record after allowing for these items? What's the balance here? 10040. What's the balance here? 10730. So what is the discrepancy between these two amounts? 10730 minus 10040. It should be 690. Is there any option of
Yes,
690?
sir. Option D, 690.
What is supplier statement? Every month and supplier send us his statement like at the start of the month, this was the balance due. During month, you make purchases of this. During month, you make purchase return of this. You paid cash of this, and this is your closing balance. So that statement is called supplier statement, that we need to compare with that supplier ledger in our account, whether the supplier saying balance is similar in our ledger balance or not. And this question was relating to this. So chapter completed. Finish. Done. So hope to see you next class with the
So when's
chapter
the next
15.
class?
Next class will be on its time. What are our normal days?
Monday, Wednesday, Monday,
Wednesday.